Welcome to the Johnny Fongo Show. I am Johnny Fongo. It is April 3rd, 2021. A little bit about my show. This show is about sharing my research into the cannabis sector, particularly publicly traded companies. We will look at everything cannabis, THC, CBD, hemp, everything in between. Now, some of the companies I'm going to talk about are not publicly traded yet. They're just getting going, haven't made that step up to an exchange. Now, I'm not a financial advisor. I am just a regular guy. I'm a big fan of the plant, a big fan of investing, big fan of trading, and a big fan of research. I hope you enjoy the information I share. Any stock or company I talk about is not a recommendation to buy it. It is more a recommendation to learn about the company if it fits into your strategy. With that being said, let's get to it. We've got a lot of news to look at today. First off, we're going to look at a story about Organogram. Looks like they repaid credit facilities with Bank of Montreal. We're going to bring in some help to talk about this real quick.
Hello, Johnny. We are going to start off with this Organogram story. Organogram repays credit facilities with Bank of Montreal. The 4th of January 1921 9 p.m. Eastern Time, Business Wire, 3.44 OTC. Organogram Holdings Incorporated, NASDAQ, OGI TSEX, OGI, the parent company of Organogram Incorporated, are collectively, the company, Organogram, a leading licensed producer of cannabis, is pleased to announce that the company has repaid all outstanding balances of approximately $58.5 million. The repayment, under the facilities provided under its credit agreement. The credit agreement is dated November 27, 2020, with Bank of Montreal, BMO, as lead arranger and agent as well as a syndicate of other lenders. The repayment results in annual interest savings of $2.7 million based on the outstanding balance at the time of repayment. After giving effect to the repayment, the company's pro forma cash position is $235 million. The company is in discussions with BMO to amend the credit agreement to provide continuing support and flexibility to Organogram in growing its business on revised terms and conditions. Back to you.
Thank you very much. Interesting story about Organogram. Full disclosure, I do own some, have owned some, have been in and out of it a few times. It's been a pretty decent trade for me so far. Currently a little underwater, but I'm hoping that's going to change soon. Next up, we're going to talk about Spider Cannabis completes private placement financing. And we're going to bring back in Mia to talk about this for us.
Thank you. Spire Cannabis completes private placement financing. The 4th of January 1921 7:07 p.m. Eastern Time, New File, Print. Vaughan, Ontario, New File Corporation, April 1, 2021, Spire Cannabis Incorporated, TSEC v. SPER Aspire, or the company, an established Canadian cannabis and vape retailer, is pleased to announce that the company has closed its previously disclosed non-brokered private placement offering of 14,814,815 units at a price of $0.0675 per unit for gross proceeds of approximately $1 million, the offering, each unit being comprised of one common share each, a common share, and one common share purchase warrant to each, a warrant. Each warrant entitles the holder thereof to purchase one common share each, a warrant share at a price of $0.135 per warrant share at any time prior to the earlier of either April 1, 2023, or 2 in the event that the closing price of the common shares on the TSEC Venture Exchange, TSEC-V, is at least $0.20 for a minimum of 10 consecutive trading days. The company may provide written notice to the holders of the warrants requiring them to exercise such warrants within 30 days following the date of issuance of such written notice. In connection with the offering, the company paid finder's fees in the amount of $16,650 to Concord Genuity Corporation and $4,050 to PI Financial Corporation. No securities were issued as compensation in connection with the offering. All common shares and warrants issued pursuant to the offering are subject to a statutory hold period of 4 months plus 1 day from the date of issuance in accordance with applicable securities legislation and TSEC v policies. As disclosed in its news release dated March 31, 2021, the company closed the acquisition of the entities that collectively comprise the business of 180 Smoke, 180 Smoke, on March 30, 2021. The net proceeds of the offering will be largely used for payroll, inventory, lease, and debt repayment associated with the entities that collectively comprise the business of 180 Smoke. Back to you.
Thank you, Mia. Biter Cannabis. Never heard of that one before. Interesting. Have to keep an eye on that. We're going to bring Guy in to take a look at a story about Orchid Ventures.
Thank you. Let's look at this story. Orchid Ventures consolidated its shares and closes oversubscribed private placement of units. April 1, 21, 5 p.m. Eastern Time, Access Wire, 0.06 OTC. Vancouver, BC /AccessWire April 1, 2021 Orchid Ventures Incorporated, the company or Orchid, CSE, ORCD OTC, ORVRF, is pleased to announce, further to its news release of March 3, 2021 and effective March 31, 2021, the company consolidated its common shares in the capital of the company on the basis of a 1 post-consolidation share for each 4 pre-consolidation shares effective March 31, 2021. The company is also pleased to announce that it has closed its previously announced non-brokered private placement of units of the company by the issuance of 16,838,000 units at 25 cents per unit for gross proceeds of $4,209,500. Each unit consists of 1 post-consolidation share and 1/2 of 1 transferable common share purchase warrant. Each warrant will entitle the holder to purchase 1 additional post-consolidation share at a price of 40 cents on or before April 1, 2023. The company has paid eligible finders cash commission in the total amount of $276,850, being 7% of the aggregate proceeds from the sale of units to purchasers introduced by the finders. The company has also issued non-transferable common share purchase warrants, the finders warrants, to the finders for the purchase of up to a total of 1,107,400 post-consolidation shares, being 7% of the number of units sold under the offering. Each finder's warrant will entitle the holder to purchase 1 post-consolidation share at a price of 25 cents on or before April 1, 2023. All securities issued in connection with the offering are subject to a statutory hold period of 4 months and 1 day ending on August 2, 2021. The company intends to use the net proceeds of the offering for general working capital. The company's post-consolidation shares begin trading on the Canadian Securities Exchange on April 1, 2021. The name of the company and trading symbol remain the same after the consolidation. The post-consolidation CUSIP number is 68573L206, and the new ISIN number is CA68573L2066. Back to you.
Thank you, Guy. Interesting story there. Next up, we're going to look at Jushi Holdings Incorporated announces update on expansion project at Pennsylvania grower processor facility. And Guy's going to come back and talk to us about that real quick.
Thank you. Jushi Holdings Incorporated announces update on expansion project at Pennsylvania grower processor facility. April 1, 21, 3:40 p.m. Eastern Time, Globe Newswire, 6.48 OTC. The company commences first phase of expansion, adding at completion 40,000 square foot to the existing 89,000 square foot facility. Strengthens partnership with Innovative Industrial Properties Incorporated, making available an additional $30.0 million in real estate funding. Jushi Holdings Incorporated, Jushi, or the company, CSE, JUSH, OTCMKTS, JUSHF, a vertically integrated, multi-state cannabis operator, announced the first phase of its previously announced expansion project, the expansion project, at its Pennsylvania cultivation facility, the facility, located in Scranton, Pennsylvania. The company's wholly owned subsidiary, Pennsylvania Medical Solutions, LLC, PAMS, has entered into an amendment of its existing lease with Innovative Industrial Properties Incorporated, IIP, NYSE, IIPR, making available an additional $30 million in funding for the first phase of property development of the facility. The funding will be used to complete the build-out of the existing 89,000 square foot building and an approximately 40,000 square foot expansion of the facility for a total of 130,000 square foot. The first phase of the expansion, with an estimated budget of approximately $40 million, is expected to add approximately 26,000 square foot of canopy for a total of 45,000 square foot, and is expected to be completed by the fourth quarter of 2021, subject to regulatory approvals. PAMS is also in the design stage for the second phase of the planned expansion, which would add approximately 60,000 square foot to the building and increase total canopy to approximately 110,000 square foot. The company expects PAMS to begin the second phase of the expansion in the third quarter of 2021, with a revised preliminary budget between $25 to $30 million and an estimated completion date of the second quarter of 2022, subject to regulatory approvals. The estimated combined cost of the two phases of expansion has increased to $65 to $70 million from our prior preliminary total of $50 million, as the company has increased the size and scope of the proposed expansion. The facility is expected to be approximately 190,000 square foot after both phases of the build-out have been completed. In addition to these two contemplated phases of build-out, PAMS continues to assess and develop further expansion opportunities at the facility to meet the needs of patients and wholesale market demand, now and in the future. We are excited to officially commence the first phase of expansion at our subsidiary's Pennsylvania grower-processor facility, said Jim Cacioppo, Chief Executive Officer, Chairman and Founder of Juicer. We continue to see strong growth in the Pennsylvania medical market, and this expansion will allow PAMS to significantly increase its canopy space and production capacity to solidify availability of its award-winning, high-quality branded suite of products to both our 11 Beyond/Hello TM medical marijuana dispensaries as well as into the wholesale market across an approximately 100 medical marijuana dispensaries operating in the Commonwealth. This expansion is also expected to create over 100 new jobs and generate additional tax dollars in the Scranton region. We appreciate the strong support of IIP as a long-term real estate capital partner, teaming with us to provide strategic real estate capital at an opportune time for our continued expansion in Pennsylvania. The facility produces high-quality, indoor-grown flower, extracts, and concentrates, and is strategically located within minutes of Interstate 81, Interstate 84, and the Pennsylvania Turnpike, enabling efficient distribution to the 111 dispensaries currently operating across the Commonwealth, including the company's 11 operational Beyond/Hello TM dispensaries. About Innovative Industrial Properties. Innovative Industrial Properties Incorporated is a self-advised Maryland corporation focused on the acquisition, ownership and management of specialized industrial properties leased to experienced, state-licensed operators for their regulated medical-use cannabis facilities. Innovative Industrial Properties Incorporated has elected to be taxed as a real estate investment trust, commencing with the year ended December 31, 2017. Additional information is available at innovativeindustrialproperties.com. That's it for that story.
All right, thank you, Guy. Very interesting story on Jushi, getting in cahoots with IIPR, big name in business in the real estate end. Looks like they're bringing more products to Pennsylvania, which is great for you guys in Pennsylvania. Next up, Agriflora announces definitive agreement to sell its AAA Heidelberg subsidiary. We're going to bring Clara in to talk about this one for us real quick.
Thank you. Agriflora announces definitive agreement to sell its AAA Heidelberg subsidiary. April 1, 3:40 p.m. ET, Globe Newswire, .034 OTC. Agriflora Organics International Incorporated, Agriflora, or the company CSE, Agra Frankfurt, PU31, HK, AGFOF, is pleased to announce the signing of a definitive agreement, the agreement to sell its wholly owned subsidiary, AAA Heidelberg Incorporated, AAA, for cash consideration of approximately $1 million, the transaction. AAA operates an 8,800 square foot indoor growing facility in London, Ontario. The closing of the transaction is subject to customary approvals and is expected to occur in the second quarter of 2021. With the positive developments being experienced in Delta, BC, at our Propagation Services Canada facility, the AAA Heidelberg subsidiary was deemed to be non-core to the company. Further streamlining Agriflora's strategy, focusing on our core assets and benefiting from the cash proceeds of this transaction are all high priorities for us at this transformative time, said Elise Coppens, Chief Executive Officer and Director of Agriflora. On behalf of the Board of Directors, I would like to thank the purchaser for their professionalism and expediency during the course of this transaction, added Ms. Coppens. About Agriflora Organics International Inc. Agriflora Organics International Incorporated is a leading cannabis company building shareholder value through the development of revenue-generating operating assets in the global cannabis industry. Agriflora is focused primarily on the Canadian cannabis industry, the world's most advanced and regulated legal cannabis market. Its flagship Canadian asset is Propagation Services Canada, a large-scale commercial greenhouse in Delta, BC focused on reshaping the Canadian flower market with high-potency, low-cost cannabis. In addition, Agriflora's wholly-owned subsidiary, Pharmaco GmbH, is focused on becoming Europe's leading distributor of medical cannabis. Pharmaco currently has active distribution operations in Germany and expects to commence active operations in the United Kingdom in 2021. For more information about Agriflora, please visit agriflora.ca and its profile page on SEDAR at www.sedar.com. Back to you.
Thank you, Clara. That was an interesting story on Agriflora. Looks like they're getting around over in Europe. It's good to see. Very good to see. Next up, we're going to look at a snapshot of Colorado's cannabis market for investors and entrepreneurs. Comes out at 3:14, April 1st, Benzinga. Clara, go ahead and take this story for us, please.
Thank you. A snapshot of Colorado's cannabis market for investors, entrepreneurs. April 1, 3:14 p.m. ET, Benzinga. Colorado was first to market in the cannabis space, and the stability in the market could mean fewer opportunities for significant returns. But there's no denying Colorado cannabis is booming. The state saw a 26% increase in 2020 sales for a total of $2.2 billion, according to BDSA data. BDSA forecasts Colorado sales will reach $2.7 billion by 2026. Potential investors and entrepreneurs could find immense payoffs and stability in Colorado if they can gain a foothold in the marketplace. Colorado's cannabis market. Leaders in Colorado's cannabis market told Benzinga the state offers investors access to a mature market, established brands, and strong performance. The Centennial State legalized recreational marijuana in 2012. Colorado is the OG market in terms of adult use, said Nancy Whiteman, CEO of Wana Brands, which operates in 12 states. The state's relatively open license structure is a plus, she said, noting that caps only exist in certain municipalities. As the first to legalize, Whiteman said Colorado has benefited from seeing its market fluctuate several times already. Colorado has already gone through a whole bunch of upcycles that earlier stage markets are just experiencing now. Jessica Billingsley, Akerna Corp., NASDAQ, Kern's CEO, also touched on the benefits that come from a mature market. We have good benchmarks for identifying well-performing cannabis businesses versus distressed companies, said Billingsley, adding that several brands have already built loyalty with consumers. Rich Batenberg, chairman of the board for Clear Cannabis Inc., seems to agree. For him, Colorado's mature market is a significant selling point. We were a good first mover, said Batenberg, adding he feels the state is a great market for new investors and entrepreneurs. Colorado's major players, smaller booms, unpredictable weather. Established markets typically bring lesser returns than more nascent ones. Massive growth numbers aren't likely to occur in a market with established land and distribution like Colorado, Batenberg said. "We're already in consolidation mode here in Colorado," he said, adding that new markets like New Jersey and Missouri offer more excitement right now. Whiteman delved into the subject as well, noting that Colorado has already seen more prominent brands like Native Roots, Live Well, and several others obtain more significant footholds in the marketplace through M&A deals that she considered reasonably priced. While MSOs largely avoid unlimited markets, she expects MSOs to continue coming into the space, as the allure of Made in Colorado branding remains in the cannabis space. Case in point, in September 2020, Columbia Caring X, CCHWF, entered the marketplace through its acquisition of the Green Solution. Investors have to ask which companies can gain enough critical mass to move the needle in any way that's meaningful in Colorado, Whiteman said. Beyond the looming presence of big brands, Akernas Billingsley said Colorado wholesale prices can be volatile. The costs hinge on the amount of material coming to the market from outdoor grows versus indoor and greenhouse operations, she said. And the weather is always an unpredictable factor. Deciding if Colorado is the market for you. For Billingsley, investing and operating in cannabis come with their risks and rewards. Colorado and large-cap stocks represent ventures that should see continued incremental growth, she said. Or you can take the risk of betting on nascent cannabis markets and emerging growth stocks with a less certain future but potentially higher rewards. Back to you.
Okay, thank you very much. That's an interesting story on that one. Kind of covers all of the Colorado issues. Next up, here's a story about Cannabis Global Incorporated. Cannabis reports year-over-year revenue growth, positive adjusted EBITDA. We're going to bring Natasha in to talk about this one.
Here is a story about Cannabis Global Inc. Cannabis reports YOY revenue growth, positive adjusted EBITDA. The 4th of January 1921, 1:40 p.m. Eastern Time, Benzinga. Canadian Cannabis Company, Cannabis Global Incorporated, TSX, Zener, OTC, ZBBISR, released Wednesday its fourth quarter and full-year financial results with full-year revenue of $59.3 million. Full-year highlights. Times consolidated net revenue jumped 95% from the prior year. Times consolidated adjusted EBITDA came in positive, at $3.5 million, which compares to an adjusted EBITDA loss of $38.7 million in 2019. Times consolidated net loss amounted to $70.5 million, or 13 cents per share, compared to $127.0 million, or 53 cents per share in the prior year. Times the gross margin before fair value changes to biological assets and inventories was $24.8 million, or 41.8% of net revenue, versus $13.7 million, or 44.9% of net revenue in 2019. Fourth quarter highlights. Times quarterly consolidated net revenue was $15.9 million, up by 50% from $10.6 million in the fourth quarter of 2019. Times consolidated adjusted EBITDA for the quarter amounted to $672,000, compared to an adjusted EBITDA loss of $11.2 million in the corresponding period of the prior year. Times the consolidated net loss was $30.2 million, or 5 cents per share, which compares to $98.7 million, or 34 cents per share in the same quarter of 2019. Times gross margin before fair value changes to biological assets and inventories was $5.3 million, or 33.3% of net revenue, versus $3.4 million, or 32.1% in the fourth quarter of 2019. 2021 Outlook. Cannabis plans to concentrate on crucial activities and assets, while divesting non-core activities and monetizing non-core assets, like the sale of the propagation segment and the Cannabis Delta facility. Management sees more growth opportunities for the Canadian adult-use cannabis market and expects shipments into export markets to restart during the second quarter, as the company responds to the new regulatory demands. We are pleased to report that Zenabis has completed a successful second year of operations with substantial growth in revenue and a much improved balance sheet, Shai Altman, Chief Executive Officer of Zenabis stated. Net revenue increased 95% year-over-year, with growth across all sales channels. Sales into the Canadian recreational market grew 78% as the recreational market grew during the year, but more importantly, the company's market share increased from 1.0% to 1.7%. Sales in the wholesale bulk channel also grew substantially by 242% year-over-year, due in large part to the company's entree into export markets, notably Israel and Australia, during the year. Back in February, Hexo Corporation, TSX, Hexo, NYSE, Hexo, confirmed it will acquire Zenabis for $235 million in an all-stock transaction. Back to you.
Okay, sounds like good stuff is happening for Zenabis. Full disclosure, I have owned Hexo before. Did pretty good on it. I'm not opposed to it. Looks like they're buying a pretty good company here. So we will keep up with them as we go. Next up, we're going to look at a story about the United Kingdom trying to get their legalization opened up somewhat.
Thank you. Here is a story about the United Kingdom. The highest crop advocates for full legalization of cannabis. April 1st, 12:18 p.m. Eastern Time, Globe Newswire. The recent global pandemic has created economic turmoil the world over, with governments across the globe struggling to find solutions and plug their respective fiscal black holes and reduce the deficits caused by restrictions designed to curb the spread of the virus. With all G7 members coming under severe financial strain from dealing with the pandemic, and with many experts predicting a worldwide economic downturn that could potentially last years, many pro-cannabis advocates are now escalating their calls for cannabis legalization, arguing that the economic opportunities alone could help significantly in Treasury's clawing back revenue via taxation, and suggesting that regulation should be looked at once again. Whilst some Western countries, such as Canada, have led the world in cannabis legalization, the United States has yet to fully legalize cannabis on a federal level, and while some states have legalized cannabis locally, large swathes of the country are yet to be convinced of the benefits, both economically and socially. The United Kingdom, meanwhile, is even further behind, and with the exception of a recent piece of legislation that allowed severely ill individuals access via prescription to cannabis-related products, cannabis as a whole remains illegal, and possession in many cases still leads to criminal convictions and jail time. The Highest Crop, a leading hydroponic and cannabis cultivation site, believes that the time has come for the debate around the legalization, regulation, and taxation of cannabis to take center stage. The Cannabis Cultivation Media Organization feels that the opportunities presented by legalization should be reconsidered on both sides of the Atlantic for economic, medical, and moral reasons, and many industry-leading experts agree. A recent report carried out by Health Poverty Action, a non-profit organization that seek to improve health and challenge the causes of poverty, state that a system similar to the established cannabis markets in the United States could generate as much as $2.26 billion, $3.1 billion a year from tax and license fees for the UK economy. Even conservative estimates from economists indicate that the potential revenue generated could easily top £1 billion, around $1.37 billion, and these sort of figures must surely make the UK government sit up and take notice. These potential earnings, whilst significant for the UK, are nothing when compared to the potential revenue that could be created by legalization at a federal level in the US. A report from industry-leading cannabis research company, New Frontier, suggests that legal cannabis could generate an additional $105.6 billion in aggregate federal tax revenue by 2025, enough to give every U.S. adult an annual rebate of almost $600. The Highest Crop argues that the financial incentives and opportunities that await federal and nationwide legalization of cannabis and a robust regulatory market around the recreational use of the now Class I substance as well as the now proven medical benefits associated with high CBD varieties in particular, are reasons enough to look again at the issue and begin a serious debate around how society now views cannabis use more generally, arguing that continued prohibition around the world is primarily based upon outdated and unfounded prejudices. Many pro-cannabis advocates from a variety of fields, such as law, botany, economics, and journalism recently contributed tone article produced by The Highest Crop, breaking down cannabis legalization and the associated economic benefits. In the very near future, The Highest Crop is looking to head up a letter to leading politicians calling for a review of legalization and the potential economic benefits. Back to you.
Okay, great story there. We're going to move on to Subversive Acquisition LP announces Intercure's expansion in Europe.
Medican, Intercure's JV partner, has committed a €10 million investment into Intercure's Austrian subsidiary. Transaction approved by Intercure shareholders and expected to close by April 8, 2021. Subversive Acquisition LP, TSX, SVX.U, NEO, SVX.U, OTCQX, SBVRF, SVX, announced today that Intercure Limited, DBA Canndoc, TACE, INCR, Intercure, Israel's leading cannabis company and SVX's intended target for its qualifying transaction, the transaction, has entered into a partnership with Austrian Medican to operate together in the developing cannabis markets in Austria and Luxembourg. Intercure will replicate the successful model of its subsidiary Canndoc in Israel, and will establish and manage the distribution, marketing, and sales of Candoc's products in selected countries in Europe. Similar to Intercure's leading Israeli model, the operation will be vertically integrated and will include both online and retail distribution for Candoc's branded products. Medican has committed to invest €10 million into the Intercure Austrian subsidiary, which 51% will be owned by Intercure. The management team will consist of both Intercure and Medican executives. The partnership is part of Intercure's international expansion strategy to major markets around the world. Austria has one of the most developed CBD wellness markets in Europe, and according to the Brightfield Group, sales of CBD products in the country reached over $80 million USD in 2019. Furthermore, Austria is in the early stages of developing a local medical cannabis market. In addition, Luxembourg is expected to be among the first European countries to allow the marketing and sale of adult-use cannabis for recreational purposes. Alexander Rabinovich, Intercure CEO, said, "We are happy to join forces with Medican's team who have years of experience in retail and vast knowledge of the local markets." The expansion of the company's operations to a Central European country is part of Intercure's international expansion strategy. This is an expression of trust, which is reflected in the investment of €10 million in the company's vision, its business model, quality, and competitive advantages of its brands. Elijah Hasidov, founder of Medican, said, "Partnering with Intercure is not only a significant milestone for Medican, but for the European cannabis market as a whole." As partner of Intercure, a leader of the Israeli cannabis market, Medican is poised to exploit the rapid pace of growth of the European market and the increasing demand for access to premium quality cannabis products. With wealth of local market experience, as well as our network of supply and distribution partnerships throughout Europe, we are now uniquely positioned to supply medical cannabis, wellness CBD, and other derivative products. Furthermore, on April 1, 2021, the Intercure shareholder vote approving the transaction passed. The transaction is expected to close by April 8, 2021. Back to you.
Okay, thank you very much. Next up, adult use marijuana delivery is a reality in Colorado. We're going to bring Mia back for this story.
Thank you. Adult use marijuana delivery is a reality in Colorado. The 4th of January 1921, 10:37 a.m. Eastern Time, Globe Newswire. Colorado Harvest Company made history in 2014 by opening the first adult-use marijuana store in Denver. In March, they made history again by being awarded Colorado's first adult-use delivery permit. Delivery is an exciting new frontier for the cannabis industry. Though cannabis deliveries are approved statewide in Colorado, local municipalities must opt into the program. Aurora is the first and currently the only city that has approved delivery, and the very first delivery license went to the locally owned and Aurora-based Colorado Harvest Company, www.coloradoharvestcompany.com. Co-founder and CEO Tim Cullen is grateful for the opportunity to be first to market. Paving the way for what delivery looks like in Colorado is important to consumers and regulators. Cullen is looking forward to other markets, including Denver, opening this summer. Things to know about delivery in Aurora. Only Aurora residents 21+ can place orders for delivery. Orders are paid for at the time of transaction, drivers carry no cash. Orders are limited to 1 ounce of cannabis flower, 8 g of concentrate or 800 milligrams of edibles mixed and matched up to those limits. Orders can be placed through the Colorado Harvest Company website at www.coloradoharvestcompany.com. Additional regulations and FAQs that can be found at http://coloradoharvestcompany.com/aurora-cannabis-dispensary-delivery/. About Colorado Harvest Company. Colorado Harvest Company, a CHC, is one of Denver's oldest and most respected dispensary operators. CHC has been a part of the changing landscape of marijuana rules and regulations since opening the doors in 2009. In addition to the bricks and mortar locations found in Denver and Aurora, CHC offers carry-out windows to promote social distancing, as well as delivery to customers in certain areas. Colorado Harvest Company has long been recognized as a local favorite for their exotic line-up of in-house strains, as well as their collaborations with many well-recognized brands in the space. Back to you.
Okay, another great story there about Colorado. Just want to take a second to thank everyone for listening. We do have a social media presence here at Johnny Fongo on Facebook, Twitter, Instagram, YouTube. Please check us out. See what you think. Last story for tonight is the press release. Parallel expands into Illinois cannabis market with agreement to acquire Windy City. Pretty interesting story. Seems it's a neighboring state to me. Before we get into that, I want to shout out to some of our listeners around the world. South Bend, Indiana, Stockholm, Sweden, Osaka, Japan, Brampton, Canada, Kenner, Louisiana, Weston, Connecticut, Savannah, Georgia, Bloomington, Illinois, Brisbane, Australia, just to name a few. We want to thank everybody for listening out there. We really appreciate it. We're going to bring Guy back in to finish up this story for us about Parallel. Looks like they're trying to get a foothold in Illinois.
Thank you. Here is the last story for the day. Press release: Parallel expands into Illinois cannabis market with agreement to acquire Windy City. April 1, 21, 10:30 a.m. Eastern Time, Dow Jones. Parallel expands into Illinois cannabis market with agreement to acquire Windy City. Transaction extends Parallel's strategic footprint to 6 states, concentrated in highly populated, limited license markets throughout the U.S. PR Newswire. Atlanta and West Palm Beach, FLA, April 1, 2021. Atlanta and West Palm Beach, FLA, April 1, 2021 /PR Newswire /Parallel, one of the largest privately held multi-state cannabis operators in the United States, U.S., today announced it has entered into a definitive agreement to acquire, in a cash and stock transaction, certain operations of Windy City Cannabis, comprised of Posen Dispensary Holding Company, LLC, Homewood Holding Company, LLC, Homewood 2, N.D., Site Holding Company, LLC, Posen 2, N.D., Site Holding Company, LLC Encompass. Dispensary Holdings, LLC, collectively, Windy City. Windy City is a leading operator of adult use and medical cannabis dispensaries in the state of Illinois. This follows Parallel's announcement in February that it intends to become a public company through a definitive business combination agreement with Series Acquisition Corp. Series, NEO, SIR.U, SIR.WT, OTCQX, SARAF, a Special Purpose Acquisition Corporation, SPAC. Subject to regulatory approval as discussed below, Parallel is expected to own 6 Illinois dispensary locations, which will expand Parallel's active operations to 6 high-growth, limited license states: Florida, Massachusetts, Texas, Pennsylvania, Nevada, and Illinois. The acquisition of Windy City enables Parallel's entry into Illinois, one of the best-performing cannabis markets in the U.S. to date. This transaction gives Parallel the chance to build upon Windy City's neighborhood retail brand presence to bring customers well-being through cannabis products. We also intend to continue to have a positive impact in Windy City's local communities by creating jobs and investing in employees, said William Bo Wrigley Jr., Chairman and Chief Executive Officer of Parallel. We have been closely following the successful launch of adult-use cannabis in Illinois since January 2020 and believe that Windy City has assembled a highly attractive footprint, including 4 dispensary locations in the greater Chicago region. Inclusive of Windy City's additional site locations opening later this month, Parallel is expected to have one of the largest retail footprints in Illinois among U.S. cannabis operators. Illinois cannabis market and Windy City highlights include: Illinois is the 5th most populous state in the U.S. with approximately 13 million residents. Total Illinois cannabis market, adult use and medical, is generating approximately $1.4 billion in annualized retail sales based on the February year-to-date period, with approximately 100 dispensaries open as of March 2021. Windy City currently operates 4 strategically located dispensaries in Homewood, Highwood, Posen, and Litchfield, Illinois. Windy City is expected to open an additional 2 adult-use dispensaries in Carpentersville and Macomb, Illinois later this month. The Windy City retail brand provides a welcoming, neighborly ambience and a dynamic dispensary experience to customers ranging from the cannabis connoisseurs to the newly curious. Parallel was the right choice to partner with because they share our focus on what cannabis can do to help improve the well-being of people's lives and our commitment to investing in the communities we serve. They also share our passion for customer service, high compliance standards and operational excellence, said Steve Weissman, Chief Executive Officer of Windy City. I'm confident that they will continue to drive equitable, diverse growth opportunities within our communities by creating jobs and supporting positive change. The transaction. Parallel has agreed to acquire Windy City for consideration of $100 million, comprised of $60 million in cash and $40 million in Parallel stock, with total potential consideration of up to $155 million inclusive of certain performance-based earn-out payments payable through 2023. Consideration offered in Parallel stock will be issued following the expected closing of its business combination with Series and resulting public listing. Windy City is expected to generate in excess of $75 million of annualized net revenue in 2021. Subject to the satisfaction of customary closing conditions and regulatory approvals, the Windy City transaction is expected to close in the second half of 2021. The closing of the Windy City transaction is contingent on, among other things, the approval by the Illinois Department of Financial and Professional Regulation, the state of Illinois' Cannabis Authority, to transfer the equity of the licensed entities from Windy City to Parallel. That's all we have for today.
Thank you, Guy. A bunch of great stories today. Kind of a long wrap-up of the week. This is the Saturday show. Once again, here at Johnny Fongo, we just like to share our research into the cannabis sector. Most of these are publicly traded. Some of them are not. Some of them are just interesting stories about cannabis and how it helps people. So that's our show. We appreciate you listening. I am Johnny Fongo. You've been listening to the Johnny Fongo Show. I want you to have a profitable day.